Developers declare the housing slump over. Let's have a look. Good morning everyone, I'm Florian Heise and welcome to another episode of Heise Says. I've got my Stein here and I thought we would have a look at this article from Brisbane Times. It's to do with Mirvac and their confidence that the housing slump is over. What do you think, guys? Do you think it's wishful thinking? Or just basing their decisions on one data source? Would an organization this large actually base all their information on one source of data? Mirvac is a huge developer. They used to have their own in-house architecture team. They couldn't just be depending on just the core logic data and making financial decisions based on that, could they? Not at their scale. Or am I expecting too much from these type of organizations? Let me know what you think in the comments, guys. Let me know, because it might be a little bit worrying. So let's have a look. Mirvac, one of the country's biggest residential communities and high-rise developers, has declared the housing market slump has passed and is planning for a busy new year. Speaking at the group's annual general shareholder meeting in Brisbane on Tuesday, Chief Executive Susan Lloyd-Hurwitz said there had been an increase in sales inquiries across the residential portfolio, which we expect to translate into sales in due course. Okay, so inquiries have increased, and that is enough for them to declare the slump over. They haven't translated into sales yet, but they're hoping it will. Could this just be positive spin for the shareholders? Our residential business is well placed to take advantage of this upswing. Already 86% of residential earnings before interest and tax for the 2020 financial year is secured. We will have a first half residential earnings skew with an approximate 65-35% split, she said. CommSec senior economist Ryan Felsman confirmed the rebound in home prices. So here's the thing. A paragraph before, she's saying that sales inquiries have increased and they haven't translated to sales yet, but then here they've already got 86% of residential earnings secured. So does this mean they've already got the 86% secured, already paid, or deposits or contracts signed, or is it just inquiries? It would have to be, since secure frames it as a bit greater certainty, doesn't it? Mr. Felsman said the CoreLogic 5 Capital City Daily Home Value Index is up by 1.2% so far in November, led by gains in Sydney up 1.8%, Melbourne up 1.2%, and Brisbane Gold Coast up by 0.5%. Well, does that align with the experiences that you've been having, everyone? We'll see. I mean, just because it goes up doesn't mean it's going to stay up. It can go down in a month or two's time. Predictions are constantly wrong. I mean, I'll bring up my favorite one at the moment is here, the wage forecast by the RBA. They're not having much luck. Wages are suppressed. Building approvals are also trending down, guys. We can see here, they're trending down. There's a spike before Christmas, but generally they're heading down. That's going to flow through to the rest of the economy. And if we have a look here, this is, GDP growth rate is also trending down from last year. The OECD yesterday predicted a decline in Australia's GDP. So where's this coming from? What are the fundamentals? That's what I want to ask. What are the fundamentals that are driving this boom? Is it just all ephemeral and the media and the market are managing to affect buyers that much? Is it a shortage in supply? Is it the interpretation of clearance rates? And I've got a video I'm working on at the moment where we will actually look at some of the statistics. So some people have data mined, and we'll see it's not what they claim to be, not at all. So the lift in housing demand, supply constraints, and record low borrowing costs are pushing up home prices, Mr. Felsman said. So there are things here completely beyond control of the sector. Housing demand is manipulated by the media. Supply constraints as well, that's affected by media and consumer confidence, or the confidence people will get from putting it on the market. I mean, you're not going to sell if you don't absolutely have to in a depressed market simply because, well, there's costs associated with it. So record low borrowing costs are pushing up home prices. Yeah, well, record low. Yes, they're insanely low. They're artificially low. Mirvac, which tipped the market bottom a few months ago, has shown its confidence in the sector through a series of acquisitions to boost its land bank development pipeline. Well, this is the thing with a lot of these organizations. They're land banking. They'll buy large portions of land. This includes a capital-effective joint venture with Boral at Authoritarianism South in Brisbane, which is a 171-hectare quarry site to be developed into 1,700 lot housing community with an end value nearing $1 billion. Now, this is interesting. This is interesting. We just looked at previously, a few days ago, the fall in Sydney land prices. In Melbourne land prices all around the country, down 20% in the periphery of the city. In Sydney, Mirvac entered into an agreement to acquire an 18-hectare site in Milperry with the opportunity to develop about 350 homes, and also a partnership with Western Sydney University. It will also look for more building to rent opportunities. Mirvac is also said to be on the short list of contenders for the purchase of the $220 million home of the 9 entertainment studios in Willoughby on Sydney's North Shore. The current owner, Michael Yang's Lotus Capital and Hong Kong-based Euro Properties, bought the site for $147 million in 2015 and are looking to sell. After a drawn-out process, there is an approved master plan for the site for 460 apartments across 10 mid-rise buildings with a forecast end value of $1 billion. Well, okay. We've also looked at the oversupply of apartments. This is maybe that's confidence that they've got in there. 9 Entertainment, which owns this publication, is relocating to the new Winton Tower at 1 Denison Street, North Sydney from mid-2020. But in boosting the land banks, Ms. Lloyd Hurwitz said Mirvac was working with government and industry bodies to improve building standards following a number of high-profile residential tower issues. Well, once again, I would argue that's got more to do with the procurement process than anything else, and it's something that is not being discussed at all. It is unacceptable that families have bought or leased apartments in good faith with the reasonable expectation that those apartments will be built to an appropriate standard, can suddenly find themselves without a home to live in, facing years of legal battle and sustained costs to rectify buildings that should have been properly constructed in the first place, she said. Mirvac reaffirms its full-year guidance earnings growth of 3 to 4% and distribution guidance growth of 5%. Mirvac securities are up 0.6% to $3.28. So, it looks like they are, well, land banking at this time and predicting a turnaround in the market next year. What do you think, everyone? Do you think they're too dependent on the CoreLogic data? Do you think it's just spruiking for the shareholders to make them feel more confident? Do you think the fact that they're land banking at this time will allow them to leverage it in the future? Even if the market drops, they'll still have those assets. Let me know what you think in the comments, guys. Interesting to see. We'll see where it goes next year. Once again, I am just concerned with the fundamentals. Remember, our last housing boom, guys, well, which was starting to come off, a lot of it was driven by foreign investment. You can see this chart from the Foreign Investment Review Board. If I haven't shown it to you before, the black line is the proportion of building approvals that are from foreign investment. It was over 90% between 14 to 16 at one stage. Look at that plunge. Look how far that has dropped. Do you think that wouldn't affect the housing market? Do you think that wouldn't overheat the apartments? And, once again, building approvals, they're trending down. Insolvencies in the construction industry is trending up. Consumer confidence, okay, it's slightly spiked up. Which is good. But, car sales, generally down. That's relating to ute purchases, particularly for the trades, another indicator of the housing and property market. And then we have arrears, particularly in Western Australia, where people are over 180 days past on their mortgage at insanely low rates. Insanely low rates. What's going to happen, guys? Let me know your opinions in the comments below. Please like, share and subscribe to the channel. If you enjoy the content, I have a Patreon where you can make a small donation. Also have Amazon and eBay affiliate links where you can make a purchase and I receive a commission at no cost to you. I also provide merchandise that we manufacture ourselves from the Heise Says website. Find the link below. And finally, we have PayPal if you'd like to donate that way. Take care, guys. Have a great weekend and I'll talk to you later. Bye for now.